Hi friends, let's start with another important chapter in customs. Was one of the main, in fact I should say the most important chapter in customs. 101% you will have a question in custom on this chapter, which is nothing but custom valuation, import valuation. That means how to calculate the value on which we are going to pay the import duty. So basically this chapter will help us to calculate what value on what we are going to pay import duty. One, secondly, we are even going to calculate the import duties which we have studied in the previous chapter. Am I clear to you? Can I start? Again, I'm saying what is the importance of this chapter? 100% 5 marks. Out of 20 to 22 marks of customs, 5 to 7 marks comes from this chapter alone. And 100%, it's not 99% also, it's 100%. Am I clear? So now what is this chapter? This chapter is concept of import valuation and tariff value. That means on what value we will be paying custom duty. So in this chapter we will be calculating the value of import, as well as we also going to calculate the duty on what will be the duty of the customs. Am I clear? Can I start? Okay, we're going to go in depth of the chapter. We'll be solving all the questions along with this only. The manner in which duty of customs are charged on goods imported into India, that is import duty in case of import, or goods exported from India, that means export duty, is basically either way. It either does a specific duty. What is that? Specific duty. What is specific duty? Specific duty based on what? Based on quantity. Specific duty based on quantity. For example, 1000 rupees will be the import duty if you import per metric ton steel. That means here the duty is based on quantity. Here the duty is based on quantity. That means per metric ton you'll have to pay 1000 bucks as import duty. This is which method? This is specific duty based on quantity. Or second method is ad valorem. Ad valorem means duty on value. Ad valorem means express as percentage on the value of goods. For example, 40% ad valorem means 40% of the value. If 1 lakh is the value of the goods, of that 40% means 40,000 will be your custom duty. Am I clear? So what have we done? Basically there are two methods. One is specific duty based on quantity. Specific duty based on quantity, one thing. Second is ad valorem method. Ad valorem means duty on value. Normally people prefer, or government prefer second. Why? See, in case of first method, specific duty method on the base of quantity, even if the value of the goods change, still the duty amount will remain same, because here you are paying duty on quantity. But in ad valorem, if the value keeps on increasing, the duty amount will keep on increasing. Am I clear? So what's written over here? The disadvantage with a specific rated levy is that the revenue to the government remains fixed unless there's variation in the quantum of total imports or export. Suppose I'm every time importing same quantity, then my import duty will remain same irrespective of the value. Whatever is the value, you are not paying duty on value, you are paying duty on quantity. And if my quantity remains same, the department's duty will remain same. The continuous upward trend in the price of goods has suggested that the government is losing increase in its revenue by not following ad valorem basis of duties. See, I haven't seen price coming down. It's always inflation only. It's always inflation. Price increasing and increasing only. So in that case, government is losing revenue if they're following which method? If they're following specific duty method. If they're following specific duty method, government is losing the revenue on that. So government don't prefer specific duty method. Government prefer ad valorem method. Am I clear? And here also we'll be studying ad valorem only. Now, before going ahead, we have to understand few technical terms. Boss, these technical terms are important from question point of view also, and this technical term is important from MCQ point of view also. Am I clear? So how many technical terms are there? There are four. One is X factory price. We'll be studying in depth. Give me 2 minutes. Second is FAS price, that means free alongside. Third is FOB price, free on board. And fourth is CIF price, cost, insurance, freight. Now, let's understand some basic concept and then we'll go to this. Understand. See, I have to pay what? Import duty. I have to pay what? Import duty on my imports. I have to pay what? Import duty on my imports. Now the question comes, on what value? On what value will I pay that import duty? Now assume I have imported goods from USA. I have imported goods from USA and the goods are coming to India. The goods are coming to India. So now at this point, when the goods have come to India, this point, what is the value of the goods? On that value, we will be paying custom duty. We'll be studying this, don't worry. We will be studying section 14. We will be studying section 14, which deals with value of imported goods, but normally that value is this point. By the time goods come to India, the time goods are coming to India, at that point, whatever is the value, on that value, we will be paying custom duty. Am I clear? So now let's understand how to calculate, how to evaluate this duty or this value. Am I clear? Okay. How many words are there? There are four terms. X factory price, FAS price, FOB price and CIF value. Am I clear? FOB value, or I should say X factory price, FAS price, FOB price and CIF value. So let's understand one by one. X factory price. Now think practically what is going to happen. Think practically. Mr. E, exporter. He is exporter, right? Mr. E, he is exporter, and I, suppose I am importer. Mr. I, importer. Importer is importing goods from USA. Importer is importing goods from USA. I hope with me. And this is a point. This point, whatever is the value at this point, on that value, you'll have to pay the custom duty. So now I want to determine the value at that point. Now let's come to the first point. X factory price. It is the price of the goods as comes out of the factory. It includes cost of production and manufacturer's margin of profit. I hope you're with me. See what is happening over here. X factory price. The person who is an exporter, he must have manufactured goods. He must have done what? He must have manufactured goods. So for him, his cost of production as well as his profit margin, cost of production plus his profit margin is what? Is X factory price. Is X factory price. I hope you're with me. If I keep on writing over here, first, cost of production plus second, exporters profit margin together brings my X factory price. price. Am I clear till here? Let's read again. What is the ex-factory price? It is the price of the goods as comes out of the factory. It includes cost of production and manufacturer's margin of profit. So assume if this is a factory, don't go with the diagram. It looks like a house, but forget that. Suppose this is a factory and this is the gate of the factory. This is the gate of the factory. That this point is called as ex-factory price. Am I clear here? Okay. Now, FAS, free alongside. It is the cost at which exports goods are delivered alongside the ship ready for shipment. That means it includes ex-factory plus local freight plus local taxes. Understand now? See, I hope you're with me. Let's understand. This is a factory. This is a factory, right? Now, the exporter has to bring the goods here to the US port. The exporter has to bring the goods where? To the US port. To bring the goods here, what will he paying? He will be paying local freights and local taxes. Local freights and local tax. That means freight and whatever taxes will come over here. Local freight plus local taxes. I hope you're with me. Local freight plus local taxes to bring the goods to US port. To bring the goods to US port, exporter must have paid local freight and local taxes. That value will also be added over here. To add local freight plus local taxes, and if I add this, it becomes FAS price, free alongside. I hope you're with me. Free alongside price. Now, what has happened? My goods have reached where? My goods have reached to US port. It has just reached to US port. Now, what need to be done by me? I need to do the loading of the goods on the vessel or in the aircraft, whatever. I need to do the loading. So I have to pay the loading charges, as well as in that country, if there is some export duty, I have to pay the export duty also. Am I clear? Am I clear what is happening over here? Technically, if you can ignore this for 2 minutes, FOB means the stage at which the goods are placed on board the conveyance carrying the vessel. It can be said including FAS plus loading charges plus export duty. I hope you're with me. So if I go with my diagram over here, and if I change the color over here, okay. Now, my goods are here. I need to load it on the vessel. What I need to do? I need to load it on the vessel. Loading has to be done, as well as if there is some export duty, exporter will even have to pay that export duty. So, whatever I'm going to pay, I'll have to add it because I want value over here. Okay. So, what I'm doing over here, in this FAS, I am going to add loading charges. Loading where? Loading at US airport. Loading charges at US airport plus export duty, if any, in that country. By adding this, I will get what? FOB price. This is what? Free on board. This is called as which price? FOB price. This is called as free on board. I hope you're with me till now. That means now, if I go with my diagram, the goods are loaded on the vessel 1 and I've paid the export duty. So now my vessel is ready, allowed to leave that country to come to my country. Am I clear? Now the vessel can leave US and for voyage to my country. Now what is going to happen? From year to year, there will be what? Transportation. There will be what? Transportation as well as insurance. I hope you're with me. That means in this FOB, I need to add transportation cost. I need to add transportation cost from where to where? From US to India, plus insurance, plus insurance, and after adding this to, I will get CIF. What is CIF? Cost, insurance, freight. This is cost, insurance, freight. I hope you're with me. What is CIF? Cost, insurance, freight. If I go again with my diagram, from here, this point, from US port to India port, to bring from US port to India port, you must have incurred transportation cost, you must have incurred insurance cost, and after adding both the costs, you will get value of India port, and this value is called as CIF. This value is called as CIF. CIF means cost, insurance, freight. Cost, insurance, freight, and cost, insurance, freight. That means this CIF is my assessable value. CIF is what? It is my assessable value on which I am going to pay my import duty. CIF is what? It is my assessable value on which I am going to pay what? Import duty. So in this chapter, basically what need to be done by me? I need to calculate CIF. I need to calculate what? I need to calculate CIF value on, and that CIF value I will be paying import duty, and we've already studied import duty types. One is BCD, basic custom duty. Second is social welfare surcharge. Social welfare surcharge. Then is integrated tax. Integrated tax under section 3, subsection 7, and there is GST compensation cess. GST compensation cess 3, subsection 9. After adding this 4, I will be getting my custom duty on imported goods. I hope you're with me. In this chapter, while solving question, along with solving question, we will be calculating custom duty also. That means here my practice of what have we studied in types of duty will be done in this chapter. And again I'm saying this will always be there in your exam. 101% one question from this chapter. Am I clear? Am I clear? So now what have we studied till now? We have studied 4 important terms. One is ex-factory price. What is ex-factory price? Ex-factory price means cost of production plus profit margin of the exporter. That means factory gate of the exporter. Value at his factory gate. Then from his factory, he need to bring the goods to US port. From his factory, he needs to bring the goods to US port. So from his factory to US port, whatever expense is going to incur, he'll be adding that in that X factory price, and by that he'll be getting FAS value on that FAS value. Now what is going to happen? Now the goods are reached to US port. Now after reaching goods to US port, you need to load the goods on the vessel. You'll have to pay loading charges, as well as if there's some export duty, you'll have to pay the export duty. And after adding loading charges and export duty, you'll be getting another value which is called as FOB value, free on board. And now the goods are already loaded on the vessel. Now from there the goods will come to India port, so they need to pay for transportation from US port to India port, and along with transportation you'll have to pay insurance. That means I will be adding insurance cost and transportation cost to my FOB value, which will give me my CIF value. What is CIF? Cost, insurance, freight. What is CIF? Cost, insurance, freight, and this is the value on which we will be paying custom duty. So for me in this chapter, I need to calculate CIF value. Okay, students who must have studied or learned this chapter before, they must be having something in their mind. No ma'am, we have studied something else. We have studied something else. we have studied there is something called as CIF value. Suppose X amount, on that X amount we were adding landing charges Y amount and X plus Y, which is equal to Z. This is my assessable value. This is my assessable value, and on this I'll have to pay custom duty. I have learned this first. It was there earlier, not now. Now this is removed. This is removed. Why it's removed, we'll be studying in depth. There has to be a reason. Whatever any changes in the law, there has to be some basis, there has to be some reason behind that. Nothing amendments come just by like that only. Am I clear? We will be studying the reason behind this. We will be studying the reason behind this. I hope you get to my point. Yes, so why this from CF, earlier it was CIF, and on that CIF we used to add landing charges, and after adding landing charges we used to get assessable value, and in that assessable value we were paying custom duty. But this is not the scenario now. You will be paying custom duty directly on which value? On CIF value. Am I very clear? Is this very clear? Any problem till here? Have you just gone understanding little bit understanding? Am I clear? Now let's go ahead. Why I feel important in terms, you never know in exam, they may give you FAS value, they may give you FOB value, they may give you Exfactory price. See what can happen in the exam. In the exam, what can happen? They may give you Exfactory price. They may give you what? Exfactory price. And they may give you all this local freight, local taxes, they give you loading charges, they give you export duty value, they give you transportation from US to India port, they give you insurance, and now you have to calculate the CIF value, and on that you have to calculate the custom duty, provided you can do this only when you know the concept. Am I clear? Can I go ahead? Okay. Now let's come to valuation. For valuation, we have section 14, and section 14 has two subsection, 14 subsection 1, 14 subsection 2. 14 subsection 1 talks about transaction value, and 14 subsection 2 talks about tariff value. Now let's understand what is transaction, what is tariff. What is transaction, what is tariff? Understand. Tariff value means I'm discussing first 14.2. Why? I'll tell you after 2 minutes. Tariff value. If government has given the tariff, government has given the tariff, as in this is the tariff. Tariff means rate. On this value, you will have to pay the custom duty. Game over. You will have to pay duty on that value only because government has given that tariff. That is called as tariff value. What is 14 subsection 1? 14 subsection 1 means transaction value. Transaction, simple words if you ask me. Suppose you're taking lecture from me, you're coming to my class and I'm charging 14,000 rupees for my lecture. How much you have paid me for this lecture? 14,000 rupees. That means our transaction is done for 14,000 rupees. Our transaction done for how many rupees? 14,000 rupees. That means that is the transaction value. Same thing over here. Transaction value means transaction value between the exporter and the importer. Exporter and the importer is called as transaction value. Arm's length price. Whatever I've paid as an importer, whatever I've paid is called as transaction value. Are you open with me? Now, 14.1 talks about transaction value. 14.2 talks about tariff value. If government has given tariff value for any goods, you will have to go for tariff value only. You cannot go for transaction value. That means 14.2 overrides 14.1. Your 14.2 prevails 14.1. So in our exam, 99.9% for 100%, you will never get a question on tariff value. Why? Boss, how will ICI make our life so simple? By giving the tariff only. That is only where we get a problem, how to calculate that value on which to pay the duty. If that value itself is wrong from our side, my duty calculation will also be wrong. Getting my point what I'm trying to convey? So never it happens that ICI gives a tariff value. But you never know when are we lucky. But provided now you were lucky that tariff value was given, but we were not aware of the concept only. We have put in all the efforts of calculating the transaction value. I hope you're getting me. So in short, 14.2 overrides 14.1 or 14.2 prevails over 14.1. That means if tariff value is given, you will have to go for tariff value. Let's read what is tariff value. Central board may fix the tariff value for certain goods and duty shall be calculated accordingly. The provisions of section 14.2 has been an overriding effect over 14.1. I hope you're with me. Am I clear? Am I clear? I hope the provisions of section 14.2 has an overriding effect over section 14.1. That means if 14.2 is there, 14.2 will only be applicable, will not apply 14.1. But if 14.2 is not given, you will apply 14.1 only. And what is 14.1? Transaction value, boss. Really important. Very important. We'll be going in depth. The transaction value means the price actually paid or payable for import or export. See, this definition is both for import as well as for export. So as of now, we'll be taking this definition from import point of view because we're studying what? We're studying import valuation. The transaction value means the price actually paid or payable for import or export of goods at the time and place of importation. See, very small things. Let's make some points. First, what they're trying to say. First point. Transaction value is what? Price actually paid or payable. Price actually paid or payable. Price actually paid or payable. 1. Okay. This is a price. Now question comes, at what time price you have to take the price actually paid or payable for import or export of goods at the time and place of import. At the time of import as well as place of import. I'll explain this word, don't worry. Where parties are not related, where exporter and importer are unrelated parties, where exporter and importer are unrelated party. And last point, price is the sole consideration. Price is the sole consideration. I hope you're with me, boss. These 5 points you need to keep in mind while identifying the transaction value. Now, what is transaction value? Again, let's understand. This is US port. This is India port. And this is where importation is happening. Am I clear? This is where importation is happening. Price actually paid or payable at the time of import. When import is happening, at that time, what is the value? Place. This is the place. Exporter and importer both should be unrelated parties. Why unrelated? Because then only there will be arm's length transaction. Boss, when you are related parties, I won't charge you a higher rate. And price is the sole consideration. That means the importer has just paid money. If this all comprises, this is called as transaction value. Let's go in depth again. Let's go in depth. Transaction value of imported goods. Valuation of imported goods, section 14, subsection 1. For the purpose of Custom Tariff Act 1975 or any other law of the time being force, the value of imported goods shall be the transaction value of such good, that is to say, the price actually paid or payable, 1, when sold for export to India. Sold for export to India का मतलब import for India. My God, law. It's not that easy to understand. They could have directly said, na, that when imported into India. No, sold for export to India. So when I am from US, it is coming. For US, it is export only. For delivery, delivery means ownership. Ownership. At the time and place of importation, where buyer and seller are not related parties, when price is a sole consideration, and E point, very important point, subject to such other conditions as may be specified in the rules made in this behalf. Subject to such other conditions as may be specified in the rules made in this behalf. Let's understand. Boss, what is 14.1 saying? 14.1 is saying, I hope you're with me. 14.1 is saying, if 14.2 is not applicable, come to 14.1. 14.2 talks about tariff value. 14.2 talks about what? Tariff value. I hope you're with me. 14.2 talks about what? Tariff value. Okay. Tariff value. Now, if 14.2 is not there, the 14.1, when I go to 14.1, 14.1 says that price actually paid or payable, price actually paid or payable when delivery, when goods are sold to India at the time and place of importation. This is a point. This is a point where the goods delivery is given. That this is the time and place of importation. At this point, whatever is the value, exporter and importer should be unrelated parties, and price should be the sole consideration, as well as such other conditions as may be specified in the rules. That means transaction value, that means section 14 subsection 1 directly says that okay, you go with 14.1, along with that you need to go with the rules. That means transaction value itself has given the power to the rules. While calculating transaction value, you need to see what is given in the rules. Am I clear till here? Any problem till here? Can I go ahead? Okay.